Welcome everyone to Vested Interest. This is Shane. Today we are going to do a portfolio update. This week I added $1,584 in new capital to the portfolio. If you enjoy dividend investing, if you are a dividend growth investor, why don't you go ahead and hit that like button, hit that subscribe button, and tap that notification bell so you're notified whenever I post any new content. I do portfolio updates like this every Sunday. I do a stock pick of the day series Monday through Thursday. I do monthly stocks that I'm looking to add to the portfolio as well, usually come out a couple days before the month. And then I also cover the dividends paid out in my portfolio. I have a series that I'm started a little bit. Whenever I see a subscriber's made a suggestion, I'll cover a stock in a little more deep dive as well. So again, if you're interested in that kind of content, go ahead and join me on this journey of financial freedom and hit that subscribe button down below. I do appreciate it. Now let's jump right into the video and see what this $1,584 added and if we have any dividends paid out this week. So we will start with the activity on November 1st. We did have a couple of companies pay out dividends. Verizon Communications, ticker VZ, out of the communications sector. They paid out $65.46 in dividends. I still have the drip set up, though I am thinking of turning it off and allocating the funds myself. I may do that at some point, but for now I'm going to leave it there. And what that means is DRIP stands for Dividend Reinvestment Plan. So whenever a company in the portfolio pays out dividends, it automatically goes back in and buys shares of that company. So Verizon Communications pays out $65.46. It goes back in and purchases that $65.46 worth of shares. It equals 1.73652 shares at $37.69 per share. AT&T also paid out on the first. They paid out $56.49, and that automatically went back in and bought 3.08192 shares at $18.32, and total dividends paid out $121.95. So first day of the month, we made $121 just for holding these companies in the portfolio and picked up almost 5 more shares between the two. And that was the activity for November 1st. Now, this is the first activity in new capital. On November 2nd, we added $1,293.83. With those funds, we picked up 2 shares of HP Inc., ticker HPQ. This is out of the information technology sector. We picked up those shares at $27.11. We picked up 10 shares of Valet, ticker VALE, at $12.88. This is out of the material sector. This is a mining company here. Sobani Stillwater, we picked up 12 shares there, ticker SBSW, another one out of the material sector, another mining company. We picked up those shares for $9.27. Verizon Communications paid. Not only did they pay out dividends, but we added to this position as well. We picked up 5 more shares, ticker VZ, out of the communications sector at $37.73. We picked up 4 shares of LyondellBasell Industries, ticker LYB. We picked up those shares at $78.55. We picked up 5 shares of Leggett & Platt, ticker LEG, at $32.51. And we added 12 more shares to our Intel Corp position, ticker INTC. This is out of the technology sector as well. And if I didn't mention, we picked up those shares for $27.86. And if I didn't mention, Leggett & Platt is out of the consumer discretionary, and LyondellBasell is another one out of the materials sector. All total, $1,293.83 on November 12th. In new funds, and those are the shares we picked up. Well, we weren't quite done. We went back and added another $291.13 to the portfolio on the 4th, November 4th here, and we picked up 2 shares of Whirlpool, ticker WHR, another consumer discretionary here, at $131.75, and 1 more share of HPQ, or HP Inc., ticker HPQ, at $27.63. All total, we put $1,584.96 in new funds into the portfolio. So a quick run through the overall portfolio, currently sitting at $93,188.21. Dividend yield has gone down a little bit since the portfolio has recovered significantly. I'm almost back to break even. The dividend yield is crept down a little bit, but that's no problem. Anything over 3% in my mind is really good. Definitely great over 5%. This smashes typical inflation and the Fed's target inflation of 2.5. Even if it was 3%, this would be better than inflation. So this would keep me ahead of inflation, and that's the goal, at least normal inflation. Right now I know it's elevated, so I understand that. And this really is what the main focus of the portfolio is: the passive income provided by the dividends paid out in the portfolio. This snowball continues to grow, whether the market's up, down, floating sideways. It gets bigger and bigger while we add additional funds, while the shares in the portfolio pay out dividends and automatically reinvest, and whenever companies increase their dividends as well. So those are the three ways that the dividends grow over time. And that's $4,835.06 is where it currently sits. And a quick run through the portfolio allocation, sitting at 9.31% in communications, consumer discretionary at 8.12, consumer staples at 6.55, energy is sitting at 8.67, financials is the largest piece of the pie at 16.07, healthcare is at 9.87, industrials is at 1.71, technology sitting at 11.13, materials at 13.94, utilities, we don't have any utilities currently. I am looking to open a position here, so whenever I see the right value, I will do so. Just still looking around right now. And REITs and real estate, the second largest, is it still? Yep, the second largest portion of the portfolio at 14.65%. And no ETFs, though I am looking at SCHD as one to potentially add, and I may even add it to my children's custodial account. Well, that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what activity was in your portfolio this week. Were you up? Were you down? Was it green? Was it red? There was a little bit of a mixed bag for me. Overall, throughout the week, I was up, so it was nice to see some green, though I do like the red in my portfolio because it means that I can continue to decrease my cost basis, increase my yield, and increase my share count at a cheaper price whenever these stocks pull back. So I don't mind the red. I know some people freak out whenever they see red, but for me, it's not really that big of a deal. Like I said, go ahead and drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it down there. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk and money, and you should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor.